Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me to discuss the Australian ETF market and the new Nasdaq-100 to launch on the Australian Nasdaq Exchange, or the ASX, is Kanish Chugh. He's the co-head of sales at ETF Securities. Kanish, it's great to have you with us. Welcome to Trade Talks.
No, thanks for having me, Jill.
All right, now tell us more about ETF Securities.
Yeah, look, I think the story of ETF Securities, it's a very interesting one. It's the recent launch of these two new strategies, which we'll discuss shortly. It's another example of how we're truly trying to provide an intelligent alternative to investors here in Australia. Now, for some context to that claim, because a lot of people can say that, it's worth understanding the history of our firm. So we were founded in 2003 by one of the pioneers of the global ETF industry, and that's a man by the name of Chugh. So a lot of people may not realize, but Graham actually created and launched here in Australia on the Australian Stock Exchange, or the ASX, the world's first physical gold ETP. Which is still running in Australia, and that runs by the ticker GOLD here in Australia. And it has nearly about 1.7 billion Australian dollars in assets. And over the past 17 years, so since 2003, we've tried to grow our presence here in Australia, and probably the past 5 years we've seen a significant growth in our team here. So we really have a true presence in the Australian ETF market. We've now got over 18 funds, including the two new strategies, and over about $2.5 billion in Australian dollars in assets. So it's about 1.9 billion US dollars. Now for us, these 18 strategies that we have, they cover precious metals, so physical gold, physical silver, Australian equities, so Australian yield, and also international equities, so things like thematics, so looking at robotics and automation, or with our Robo ETF, or even a pure sector play in tech. We launched the Australia's first India equity ETF here in Australia last year. So we're really trying to constantly innovate, and I think that's something we're proud to do.
All right, now tell us more about the Australian ETF market. How does it compare to other markets?
Yeah, so it's interesting. So the Australian ETF market, it started in 2001. Now, if I'm truly honest, it only really came alive in the past 6 to 7 years. So in terms of new products and AUM growth, and 2020, I think we've seen this big expansion of different strategies. And I think also investors adopting ETFs in Australia. So from 2001 to 2007, there are actually only 4 products listed, and one of those was our gold ETF. Since 2017, so in 2017, June 2017, we had 79 products listed, and we now have about 211. So if you take it in asset size, let's put that in perspective. June 2013, there was about 7.5 billion Australian dollars. At the moment, we have over 65 billion Australian dollars in terms of the market size. So in terms of average annual growth over the past 5 years, it's probably been about 30%. And so, yes, I think to a lot of people, the Australian ETF market is smaller than the US, for example, whether it's by size, whether it's by products. We actually get compared most frequently to the Canadian market. And I think that's primarily because of investor behavior, the regulatory framework, so just the makeup of our financial services industry. And I think we are sort of playing a similar sort of trajectory in terms of the Canadian market. And what we're seeing is, it's not unfair to say that pre-COVID-19, I would have said, we could hit, 100 billion in size of the market by the end of 2021. It may actually be a bit more, given the increased traction. And I think one of the reasons, just in terms of the way in which ETFs are being used in Australia, have traditionally been passive vanilla equity exposures, and buy and hold strategies, and mainly by sophisticated or professional investors, so financial professionals. So I think that's down to a lack of awareness or understanding of the ETF market, and also just a lack of development by the ETF market early on. As I mentioned, the past 5-6 years, we've seen new players come into the market. We've seen new style of ETFs, new ETFs in different areas, that whether it's equity thematics, whether it's sectors, whether it's fixed income. And now we're obviously working from ETF Securities perspective, looking at that leveraged and that inverse range, so the trading tools. And I think that's what we're trying to see here, is the ETF market in Australia has started to grow quite significantly. And just to put some numbers in terms of that, in June 2019, there was about 111,000 of average 12 months, average transactions. June 20, there was about 309,000. So I guess 2020, because of COVID-19 and the volatility, we've seen a greater use of ETFs, and that could be whether it's to take a view on the market, whether it's as a trading tool, whether it's a buy and hold strategy, but it's really seen a flock of investors coming in. And that leverage and that inverse range has seen significant growth as well. So I just wanted to touch on this. You know, the understanding of these types of ETFs, they're designed as trading tools rather than traditional buy and hold strategies. And by that, I'm referring to sort of that leverage and inverse. So we've had these available since 2012. And since about 2018, there've been 5 in the market, you know, giving investors the ability to take exposure to, you know, leverage view on the ASX 200 or the S&P 500. Again, limited range for investors here, but because of the market swings in 2020, you know, we've actually seen monthly turnover peak to about 3.5 billion. Now, again, putting some data behind that, the average monthly turnover of these 5, you know, leverage and invest products that were available in 2019 was 182 million Australian dollars. So massive increased usage. And I think that's also coming down to, as I mentioned, the understanding from investors here in Australia, just how to use these types of tools.
Yeah, it certainly sets up a nice footprint for future growth. And of course, congratulations to the new short and levered Nasdaq-100 funds listing on ASX. Why did you choose to launch these products and partner with Nasdaq?
Yeah, so look, the 2 new funds are the ETFS Ultra Short Nasdaq-100 Hedge Fund, and the ASX code, so the Australian Stock Exchange code for that is SNAS. And that's really a trading product for us, offering the leverage inverse exposure to the Nasdaq-100 index. And the other fund that we've launched is the ETFS Ultra Long Nasdaq-100 Hedge Fund, and the ASX code is LNAS. And for that, again, it's a trading product offering leverage exposure to the Nasdaq-100 index. So why the Nasdaq? Look, this is interesting because to me, the Nasdaq-100 has really developed, and I think, you know, people still have this lens of the Nasdaq-100 as being just purely tech, you know, maybe potentially speculative plays. And I think that's really, we need to really educate investors around the fact that the Nasdaq-100 index includes these FANG style names, you know, high quality, innovative companies, you know, companies like Facebook, Apple, Amazon, you know, companies that to my perspective are blue chips. And I think that's what we need to understand, that to a lot of investors, the FANG style stocks should be considered as a core in a portfolio. And Australian investors probably have this view of blue chips being high quality yielding companies. And I think globally that's moved. And I think that's where we've looked at the Nasdaq-100 index as being, you know, for investors, especially when we're talking about this style of tool, it's really useful to have. So I was looking at some stats. So if I looked at the end of 2019, 31st December, the Nasdaq-100 index by market cap was about 8 times the size of Australia's traditional benchmark, which is the S&P ASX 200 index. You know, you've got 4 companies, I think, that have a market cap of over $1 trillion. And, you know, whilst it's very much focused on the technology sector, there is, as I mentioned, some high quality mega cap blue chip names in there. And for us, we really wanted to continue to grow the offering that Australian investors can have around the leverage and the inverse tools available to them. And it made sense to look at the Nasdaq-100 index for that.
Yep. Kanish, as we say, the modern day industrials in the Nasdaq-100. Thank you so much for joining us on Trade Talks.
No, thanks for having me, Jill.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.